Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. It's Macro Monday. Let's take a look at some exogenous stuff that may affect BTC. I mean, let's be honest, that's why we're really here. That's why we care about macro at all. It definitely has influenced crypto in bull markets and in bear markets, and it's certainly influencing crypto now. Some curious questions to think about. Why are we decoupling from DXY? Why are we decoupling from liquidity potentially? Then I got some fun comparison charts here towards the back half. But as far as the global fund flows go, we got another plus 2 billion last week. Most of that was IBIT, most of that BTC. Ethereum's starting to wake up. Solana kind of lagging a little bit, and you're kind of seeing that play out in price. ETH playing a little catch-up game here. And then everything else nobody really cares about yet. So we're certainly early, air quotes, on that front. And then globally, almost everything is in the United States. If any of the rumors are true about a nation state buying BTC, and we will know here probably within the next couple of weeks, but it certainly feels like the way price action is running, there's definitely a large buyer or a lot of medium-sized buyers or many smaller buyers. On the 30-day cumulative flows, this is starting to mirror what we saw in 2020. That was more of a buildup into 2021. But if we compare this to like the gold flows, it's not even close. And I see a lot of crypto folks comparing to gold, which I think is appropriate and fair. I don't know why it's not loading here. It's appropriate and fair because the gold bugs try to dunk on us all the time. I think for the most part, a lot of the gold flows are outside of the ETFs. They're in, buying gold bars at Costco or stuff like that. It's sort of peer-to-peer. That's my sense generally. Whereas for BTC, it's much easier to custody for most people to just use the ETF. I mean, most people do not want to deal with self-custody. That's just where we're at. Now that may change over time, but this is the quickest, fastest, and most accessible way for most people to get BTC. Especially the people with the money. The people with the money don't want to have to go through all the hassle of figuring out the hardware wallet, figuring out all that other stuff, figuring out where to store it, figuring out any other custody security concerns. So most of it is flowing into the ETFs. Now, if you're a nation state, you probably got a guy to help you out in that department as far as the custody goes, and you're not buying the ETFs. But on BTC itself, we're getting closer to maybe an interim target here. Everybody is looking at 100K at this point. I mean, just round number bias for sure. We've been watching this pitchfork for a little while. We survived and bounced on the midpoint. And typically when you see that, you try to reach for either the floor, as we did in October 2023. We bounced down from the midpoint versus crossing up from the midpoint. So in this case, there's an assumption based on pitchfork rules that we try to reach for whatever the ceiling might be. Now, I've already added this purple extension, which is outside of pitchfork expectations. This extra white section would be into very overbought territory. Now, there's obviously no guarantee we stop there, but it should start to look more interesting from a consolidation perspective, probably from 100 to 110. Now, I mean, if we just teleport to 250, then, what do we care about the pitchfork? But the gravity of this pitchfork, imagine like this is like Saturn or Earth, and this is the moon. We're just rotating around, right? The sun, whatever gravity metaphor you want to think about. There's this gravitational pull continuously towards the midpoint of the rate of change. So the question here is, do we catapult ourselves out of that? Do we slingshot ourselves above the pitchfork, which we have seen once before, or do we slow down a little bit? Now, the bearish target after the consolidation would be the midpoint, which is fine, right? It's still higher eventually, just a matter of how long it takes us. Does it take us 6 months at 100, or do we just keep going? If you asked anybody today, they'd tell you, what do you mean? We're just going to keep going. So it's an if this, then that situation. We'll see what it looks like when we get there. But as far as a roadmap, I'm definitely watching this. Now, it starts to get interesting when we add the power law, because the midpoint of the power law is roughly about where the pitchfork you'd expect to pull us back into this gravitational pull of the midpoint. So again, it's an if this then that. Do we find resistance at the midpoint again, which is actually probably less likely than just full sending it. And we can look at what happened in 2015 to 2017. I talked about this last night. We had a super clean pitchfork, years and years here. First, this is where I first saw someone even use a pitchfork. Just because it was so clean, I was like, okay, that's obvious. It's a channel. It looks great. There are lots of rules about falling out the downside here in the bearish section. I don't see too many rules about what happens when we slingshot higher. Now, we saw what happened in 2017, and it would be a similar idea here. If we actually cross the midpoint of the power law, then things start to get real. Things start to get very real. And the odds bump up that we try to reach for the ceiling of the power law eventually. And, it is what it is, right? It's 362. Nobody would have believed you at 2K, at 3K in 2017 that we were headed to 20. That was a 10x. This is less than a 10x. So just to put that into perspective, despite, the numbers being larger, it just is what it is. It is what it is. So we'll see what the power law is made of this cycle. Before we go any further, let me mention today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of the Kraken trading experience with a one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out Kraken Pro with the link in the description of this video. Not investment advice. Crypto trading involves risk of loss. Cryptocurrency services are provided to U.S. and U.S. territory customers by Payward Ventures, Inc., PBI, DBA, Kraken. Looking on Kraken, we've had quite a day here. A lot of people, again, they're getting pretty freaked out because for some reason, most people would rather just sit in negative P&L for months, for weeks, just perpetually negative P&L. People just are so comfortable. But the moment they are in profit, they just don't know what to do. I think that part of that comes with the volatility and experience, but there's this propensity for newer traders to want to close versus letting your runners run. And obviously you need to have your own risk parameters and acceptable targets and whatever else. Looking at the daily, we are definitely parabolic. I mean, there's no question about it. One thing you can always use on a higher time frame is just a simple ray. We can just make some drawings here, draw there to there, there to there. And the idea here would be when we cross this to the downside, that would be a stop loss. But if you remember what happened in February, we just kept going, right? We consolidated for about 10 days and then we go in again. So we could see that at 100. We could see that at 92. We could see that at 88. I don't know. We are certainly within the realm of possibility, depending on how you want to measure this stuff down here. We are in the wheelhouse right now, but this still looks very strong. Hasn't got rejected, hasn't gotten sold off. People saw what happened over the weekend and they came in and they bought more and they kept buying and they're still buying. We can also go to a lower time frame. We can pop on the Williams fractals. Maybe if I'm on a higher leverage, this is something, trying to make these bigger. This is something that you would do is, okay, obviously there's no Williams fractal on the daily yet. And maybe that's a sign for most people, just chill out, wait for some sort of automated trailing stop loss. Now you could always say, I'm going to use 5%, 10%, whatever. That's always an option. But currently the trailing stop loss on the daily is at 70, okay? And again, I compare this to what we just lived through because we had no trailing stop loss here in February up until 50. And that was from 40, 42. So you can survive like this for a long time. Even before that, this is the other type of scenario to watch for, just a slow grind on the Tenkin. So there's really no stop loss that's close, no trailing stop loss that's close here on the daily. That does force you to go lower. And you got to be careful that there's not too much noise here and automatically you're getting stopped out here. But again, it depends on your leverage, sizing, et cetera, et cetera. But you can go to the 6 hour and you can say, okay, there's another Williams fractal there. There was one here. We can keep going if we really want to. But even on the 4 hour, our best trailing stop loss is at 79 based on some automated system. So I don't really see anything here. Yeah, it looks overbought, right? What does RSI look like? RSI is at 85, but we don't have a bear div. We're not even pretending to slow down or sell down here. It's going to be volatile, but you just most likely sat through 7 months of chop. Why do you want to take profit the first day we break out? Not financial advice, obviously. Just something I'm thinking about and seeing a lot of people talk about. Today's Veterans Day. In the US, bond market is closed, equities are open. Lots of Fed speak this week. The big thing is going to be CPI and PPI, and we have some JPOW towards the end of the week. It looks like meeting probabilities have shifted in favor of more and more here, not hiking in December. So depending on, not cutting, not easing in December. Depending on CPI, which we are pretty sure is going to be higher for last month, depending on jobs, there may be a scenario here where they don't ease, they don't cut in December, especially with the markets where they're at, just absolutely roofing. That might be something that cools us off if we start to adjust this easing path. Because if you look at anybody on macro Twitter, they're saying, well, XYZ, ABC, meme coins, all these things are popping off. GME is up, Tesla's up, all right. They're like, well, we don't need to cut if this is what's happening. I'm not going to disagree, but I think they care more about the jobs market than anything here. Trueflation has continued to rise. Now it's almost at a 1-year high on Trueflation. Trueflation directionally has been correct. It hasn't been 1-to-1 month over month, but directionally it has been very correct. So it is troubling to see this continuing to pop up. And this feeds the fire for not continuing to cut. We back this out. The Fed is probably looking at this. They have their own data. They see this, and they're going to have to start to acknowledge the fact that inflation is starting to rise again here. The issue is with Trump, what is he going to want? He's going to want rates as close to zero as humanly possible. So we're going to see what happens, right? Do we get inflation with Trump? And does the Fed have any leeway there? Or do we get inflation plus rates coming down? Certainly possible, the way he wants to install a shadow Fed governor, effectively. He wants Powell out of there, and Powell says he's not going. This is CPI month over month. It is rising. Core, that's the month over month. This is the year over year. Year over year rising. Core basically flat. PCE also rising. So these are headed in the wrong direction, as they say. And what matters more to the Fed here, the job market or inflation? Are we headed for stagflation? A lot of people think we are, but it's not so easy as just saying, oh, inflation's at 10%. Obviously, we're going to keep hiking, or inflation is at 0. We're going to keep cutting. It's much harder to make a clear decision here, and it's more of a judgment call because, this is rising. And again, with Trump's tariffs, with Trump's immigration policy, it doesn't matter where you are on the fence there. It's just factual. If those things come to pass, I'd expect them to be inflationary. So we'll see. We'll see, right? What actually happens here? Does Trump let the Fed be the Fed and control inflation? Or is Trump ready to bring rates lower? We're starting to buck these trends of both liquidity and dollar strength. So this is from Cross Border Capital, Michael Howell. He's the liquidity king. I would trust him over anyone else. And what he's showing here is in the black there, liquidity basically falling off the table. For the most part, we're pretty correlated with the liquidity. So this is another little nagging, hey, by the way, we might be all the way up here on the pitchfork, and then liquidity just gets pulled out from under us. And we don't have to go back to 75, but it's probably harder for us to push up. You know what I mean? So it's just something to think about. Definitely more of a headwind than tailwind. It's not a, hey, we're going to turn around back to 60. It's going to be harder to push us higher type deal. We also have the reverse repo starting to drain to 0. And this is more of a QE/QT conversation, bank reserves conversation. The issue here is if bank reserves get too low and RRP is empty, they're going to have to do something about QE versus QT, because then that puts an incredible amount of stress in the liquidity piping. So there may be this other side of this graph to read this and say, liquidity is actually getting drastically reduced, and the Fed's going to have to step in here pretty soon. And if that's the case, then we're going much higher on BTC. And we may see that on reverse repo by the end of the month, where it just gets drained to fumes down there. GDP still looks good. I have nothing to say about that. One thing that's on the back of my mind is, okay, now that Trump is in office, he's going to get credit for all of the good stuff. The macro doomers are, from what I've seen, very much hard right. So it's going to be interesting how much they soften their doomer message once the right is in power. You know, who else is there to blame? I mean, they can blame the previous administration, but for how long? But GDP looks fine here. The yield curve in the gold line, that's today's yield curve, that has flattened out quite a bit. We've uninverted the 10-2 on the white line here. Interest rates came down, and the jobs number's still flat. People watch this because of the recession implications. Historically, with yield curve inversion, we get recessions, and mainly that's more true on the 10-3 inversion. So we still have a little bit of time. You know, it's definitely troubling to see 10-2 uninvert, but the 10-3 is also getting there. And that's maybe more problematic than even the 10-2. This is the XY on the weekly, and it's gone straight up since Trump odds started to increase. It's now at 105.5, and we can just add this to the pile of stuff that's in the be careful headwind pile. Now, I had thought that we may see us break 100 with Trump winning, but that clearly was wrong. And doubly so, it hasn't seemed to matter for BTC. And we could say, well, that's a regulatory question versus dollar headwinds, or Bitcoin strategic reserve versus dollar headwinds. But again, because of the tariff implications, the dollar has strengthened considerably. And do we see BTC top out if the dollar makes new multi-year highs? If we're at 107.5, is BTC going to be okay? You know, we don't care right now. It doesn't feel like it on the BTC side, but we may start to see some interesting stuff here, or where we finally start to feel this blowing headwind in our face, and BTC just can't keep going at the rate of change it has been rising. So we'll see. But we have seemed to lose that correlation recently, or inverse correlation. On gold, it's pulled back a lot. Anyone who was long from, let's say, 24.20 or thereabouts, probably hitting some sort of trailing stop loss up here. We may get a head and shoulders fractal, shoulder, head, shoulder to be formed here. But the cloud is telling you there's some early signs of weakness here. It lost the blue line, the Tenkin, and this kind of makes sense again with BTC versus gold. BTC tends to lag gold by 3 months. So if gold is slowing down, it's passing the baton to BTC. And we may even be seeing, nation state reserve selling gold to buy BTC, as maybe crazy as that sounds. It's possible, and it's possible that's why we're seeing what we're seeing on the gold front. S&P looks okay. It did well post-election. I don't really have any targets or anything trend-wise. It looks fine. Passive money is going to keep buying this because it kind of has to, but I don't really think there's a trade per se on the index. The same thing with the Qs. I don't really see a great trade here. BTC can do well so long as the bigger indices aren't just selling off. We don't want to see a negative 10% day on the S&P. That's not good for BTC. But I'm not seeing any obvious alarms here. It just, it just looks uninspired and kind of whatever. IWM, on the other hand, small caps, has started to break out in a big way, started to make new all-time highs, huge gap up there. And this has been the main story. Whether it's regulation, M&A activity, this is where the speculation has started to move. Mag 7 has slowed down outside of Tesla, and other things have picked up the slack here. And then I wanted to add ARK, because ARK is a good barometer as a benchmark for alts, or just to understand, what are people doing here? Are they selling ARK or are they buying it? If they're buying ARK, it's probably risk on. If ARK is making new multi-year highs, it's probably risk on. And this is something we definitely talked about for months and months and months, as far as ARK being outside of the weekly cloud into Q4. And here we are. So if you're trading alts, if you're trading highly speculative beta stuff, you want ARK to look like it does. And you probably want IWM to look like it does as well. You want the rally to broaden out a little bit. I think the worst chart of the Mag 7 is probably Microsoft. This just looks ready to break down here. Now, it doesn't need to do anything, but it certainly doesn't scream, hey, this is super bullish here. And this is just something else. We're really watching all this for crypto, right? We're looking at what is this trying to tell us relative to crypto? What happens to crypto? What happens to BTC if Microsoft breaks 400? What happens to the rest of the Mag 7 if they start to roll over and it pulls the indices down with them, right? So this chart doesn't look super, super happy up here. If we look at some of the comparisons to BTC, we're breaking out of everything. This is Bitcoin against the S&P, almost ready for new all-time highs. We made a new inflation-adjusted all-time high over the past couple of days. Bitcoin against the Qs, new-ish 52-week highs. Looks ready for more. Bitcoin against IWM looks great. That's, I believe, a new all-time high there. Bitcoin against gold, huge breakout. So anybody who's comparing these, the answer seems pretty obvious. You know, the USD pair looks great. And then any of these comparison charts are no-brainers. It's not like this wishy-washy, oh, I don't know, we're in a range. Did we break out yet? You know, no, we broke out. It looks ready for all-time highs, if not much higher than that. This is Bitcoin against ARK. Really no contest. You know, this is basically Bitcoin dominance effectively. It just continues to rise and rise and rise and rise. And when you're looking at these you know, untradeable pairs, you're basically just looking for any obvious landmines. This is semis versus software, SMH over IGV, and definitely favored software because of this head and shoulders type structure. And we got our answer over the past few trading days. This continues to favor software over semis. And to me, just says the semi trade is probably done for now. You know, it had a great run in 2024, and a lot of the relative value stuff got out of whack, and now it's starting to correct in the other direction. Here's MSTR, everyone's favorite BTC closed-end fund proxy vehicle. It is starting to get in the wheelhouse of expectations based on the measured move of the previous consolidation. You know, I got to say that super carefully because someone's going to come after me. But I'd expect this to start slowing down in the pitchfork. If we back this out, this is the pitchfork, okay? We lived below the pitchfork for a long time. In March, we popped above, reconsolidated, and now we're going to see if we can break 550, 600. There's still a lot of daylight left, but for me, I will be reducing up here into either BITU or some other ETF or something. That just makes more sense to me, especially if the premium goes to like 10 or something silly. That seems like a good place to reduce the position further. Some other pair trades, MSTR versus Sol. Everyone is all in on alts. It's kind of like there's these buckets of people. It's like they love the miners, they love MSTR, they're Bitcoin maxis, or they love Sol or ETH or whatever, right? But as a trade, if you stack these up against each other, they're both effectively trading similarly, like 2x BTC at the very least, and this continues to favor MSTR over Solana. MSTR over BitX is a different story. To me, this looks a little double toppy. This looks a little inverted Adam and Evie. So there's a little bit of a landmine here for MSTR relative to BitX that may favor BitX over MSTR, and this is something else to watch along with the pitchfork, right? Do we start to see MSTR slowing down, which is, you know, that's heresy to the MSTR people. They think all this can ever do is be the fastest horse. I'm just looking at the charts. So if it tells me bearish TK cross price in the cloud with a chart pattern, with a double top, right? That to me is a pretty obvious play that favors BitX fully. But as we stand here, MSTR has still been winning for a very long time. It's had a great run, so it would make sense if something else started to pick up the slack a little bit. It doesn't have to happen. This doesn't have to break down. But yeah, I'm definitely watching this as a trading signal. Here's miners against BitX breaking down. Now this had consolidated in this giant inverted head and shoulders. Miners are effectively 2x BTC as a group. Now your favorite miner probably doesn't look like this, to be fair, whether that's IREN, CleanSpark, Mara, whatever, right? But as an ETF, as a group, as a basket, this to me almost is starting to look like a failed inverted head and shoulders consolidation. You got your bearish cloud breakout, bearish TK cross, bearish cloud. It certainly doesn't favor WGMI here. If this was able to get back to highs, then it would favor miners. But as we stand here, this does favor BitX, definitely. Here's WGMI alone. This was the old sort of ping pong channel. You know, we're back to near the selling point. The question is always, okay, this has worked 3 times in the past year and a half. Is now really a good time to sell? You know, you don't have to go to cash. You can always sell to BitX or sell to MSTR or sell to the ETF or sell the spot, you know, whatever. But as a ping pong range trade, it has done pretty well. As a group, you know, again, individual miners are going to look a lot different, but as a basket, WGMI is starting to get in the sell resistance area that we've seen since 2023. Something that could change this is if fees pick up, if we start to see more like L2 activity, I don't know, right? Miners do best when fees are highest. So if fees really ramp up, miners should start to do better. But where we sit here, I really like BITX over WGMI. Here's Coin. Coin was a curious one because it had been setting up pre-election for a triple bottom breakout. We got the answer post-election. You know, it was ready to go as if Trump won, as if we were headed for regulatory reversal, basically. You know, we're going from a harsh regulatory environment to a much easier regulatory environment. So it's not like that was untradeable, but at this point, it's definitely well past the measured move. The question I have is, are we going to return to this rate of change, which would basically be like 550, you know? I don't know if I've ever seen that. I'm sure it's possible, but this pitchfork worked very, very well. Again, similar idea. The selling point is up here. The midpoint is the gravitational pull of where you'd expect price to live most of the time. So if we can get back into this pitchfork, I don't think that's unreasonable. And for whatever reason, the CleanSpark chart is basically identical. Pitchfork fell out of the pitchfork, consolidated as an inverted head and shoulders, and started to break up. For CleanSpark, the midpoint there is somewhere between 35 to 40. And again, the highest band of the pitchfork would be danger, overheated, overbought zone. So just from a student of the market, it's going to be very interesting to see if we can get back to the midpoints there. And then CleanSpark against Coin has basically been a wash. You know, it's kind of said, do whatever you want, because there isn't really a great signal here. Now, you could argue maybe there's some support for Coin at the bottom of this range or something. You know, you can draw like a box with support resistance, and maybe we start to favor one or the other as we get towards the extremes. But in general, this hasn't really trended too long. You know, just sort of ping pongs back and forth, back and forth. Last one here, Tesla looks fine. It looks okay. It's broke out. The daily today is a spinning top. A spinning top typically means buyers and sellers coming to an equilibrium. It wouldn't surprise me if this starts to slow down. It also wouldn't surprise me if into 2025 we get some sort of 400, 500 target. Sure. You know, the real chart though is Doge against Tesla. Let's be honest. If we're going to do Elon against Elon, what would you rather trade? Doge or Tesla? It sounds insane. I've never seen anybody look at this chart before, but the answer is clear. It's Doge. You know, Doge is making highs. Doge is strongly trending higher. It's going to be interesting to see, will we top out at the previous high? There was a huge Adam and Eve down here that broke out, but so far so good for Doge relative to Tesla. So as strong as Tesla has been, you know, if you have access to everything and you're just making a trade, Doge has been the play. So I mixed it up today. Hopefully you enjoyed the alternative charts. Certainly I encourage experimentation. If you find anything interesting, let me know on Twitter. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.